Where will Apple stock be 2 years from now, and more importantly, should you care deeply about the answer? That's the question analysts at 24/7 Wall Street are putting front and center, and the prediction they've arrived at is turning heads across the investment community. Apple, the world's most valuable publicly traded company, sitting at a market capitalization hovering around $3 trillion, is not just a tech stock, it's a benchmark, a barometer, and for millions of retail and institutional investors alike, it's the cornerstone of their portfolios. So when a credible financial outlet makes a bold 2-year price prediction on Apple, the entire market listens. Now let's think about what actually drives Apple's valuation over a multi-year horizon, because this isn't just about selling more iPhones. The company has been executing one of the most deliberate and disciplined pivots in corporate history from a hardware-dependent business model toward a high-margin, recurring revenue services ecosystem. Think Apple Music, iCloud, Apple TV+, the App Store, Apple Pay, and now the expanding frontier of Apple Intelligence, the company's artificial intelligence integration suite embedded across its devices. Services revenue has been growing at a pace that consistently outstrips hardware, and that shift fundamentally changes how analysts assign value to this company. The 24/7 Wall Street analysis doesn't exist in a vacuum. It factors in Apple's extraordinary ability to monetize its installed base of over 2 billion active devices worldwide. That's 2 billion potential subscribers, 2 billion potential transaction participants, 2 billion users generating data and engagement that feeds back into Apple's growing financial services and advertising ambitions. The compounding effect of that installed base, when layered with premium pricing power and one of the strongest brand loyalties ever recorded in consumer history, creates a financial flywheel that's genuinely difficult to bet against. But let's be honest about the headwinds too, because serious analysis demands that. Apple faces mounting regulatory pressure across Europe and the United States, with antitrust scrutiny targeting the App Store's commission structure and the exclusivity of its ecosystem. There are real questions about whether Apple's generative AI push will truly differentiate its products or simply keep it competitive in a rapidly crowding field. And China, both as a manufacturing dependency and as a consumer market, remains a geopolitical wildcard that could reshape Apple's revenue trajectory faster than any analyst model can predict. Then there's the valuation question itself. Apple currently trades at a price-to-earnings multiple that reflects significant optimism already baked in. Growth at this scale, from a company this large, requires not just performance, it requires performance that consistently exceeds elevated expectations. And history shows us that even the greatest companies in the world can disappoint a market that's priced them for near perfection. The 24/7 Wall Street prediction leans bullish for the 2-year window. The thesis centers on continued services growth, the anticipated product cycle refresh driven by AI-integrated hardware, and Apple's relentless share buyback program, one of the most aggressive in corporate history, which mechanically supports earnings per share growth even when top-line revenue growth moderates. These are not speculative catalysts. They are structural, visible, and largely within Apple's own control. What makes this prediction genuinely interesting isn't just the number itself, it's the framework it forces us to confront. Are we in a market where quality and scale and ecosystem dominance will continue to command premium valuations? Or are we approaching an inflection point where the gravitational pull of size begins to slow even the most formidable of compounding machines? Apple has defied skeptics for 4 decades. Tim Cook has quietly built one of the most durable financial empires in human history. But markets are ultimately a voting machine in the short term and a weighing machine in the long term, and the weight of expectation on Apple right now is historically heavy. The real question isn't where Apple trades in 2 years, it's whether the world it operates in will still reward the same bets it always has.